Okay. Just getting a bit comfortable. Wednesday, New York sessions just passed. Get my timer started. See, making sure I don't talk too much. Taking the constructive criticism. So, looking at this candle right now, I can tell you that's exactly why I don't trade CPI. This big candle is crazy. How many pips was that? Just for the body. 49. That's hitting some people's TP. But we do see price come down, touch a higher time frame PDO, reverse, and then shoot up for a couple of pips. Even if you missed the bottom, let's see what you got here. Small change. Okay. So I did trade the London session. You can see. In fact, let me walk through price. So we do see price. Again, this is Asia. This area here is all Asia. After price leaves Asia, we can see that price is in the middle of Asia. So I like to call that internal liquidity. We do see price rise up, touch the execution OB, and then turn around, which is fine. I do like that. When price did actually hit OB, that was my close. My seasoned traders, you know what the hell this is. My beginner students, of course, if you are still scalping like you have done for the last 2 weeks, you'd be fine. However, if not, you would have closed at a half of your initial risk, because you should have implemented your dynamic stop. Alright, cool. And then we move across to the New York session, and we can see price starting retracing in the rally from the London session. We see it dip before rallying again for some highs. Then this crazy bang price action. This is all CPI. This is why people don't trade it. People who are looking for long-term consistency. However, if you are the trader who wants to, I don't know, use it to pass a prop firm, or you're just still gung-ho, still early days, you're probably still trying to trade this. You probably would have taken an entry for a short here, been taken out with the higher liquidity. See this? See the wick up at the top? All here. That's taking out your short trade before crashing down to continue. It's a bit jarring, and then of course the liquidity is set for the true intraday move for your buy. So if ever you're thinking to yourself, should I be trading, should I not? You see CPI. Here's an example as to why you shouldn't trade CPI. So here, today, Wednesday, I traded London session, but I skipped New York session. Unagi. Just gonna go over to Monday and have a look at the weekly profile. So we can see Monday and Tuesday in the same line, which is okay. And then we have Wednesday, which is still in line with Monday and Tuesday. That's not okay. Now, when I say not okay, prior experience has taught, if such a weekly profile is issued, then we shouldn't expect price to rally as much, or price to be as clean. Let's have a look at a higher time frame. If you are one of the people that will like to screenshot or whatever my chart while I don't mind, try your best not to do it on my higher time frame analysis because it's going to be a lot of work on with strategies that I used to use or implement, you know what I mean? Okay, looking at the daily. So I've moved from a low down here, come up here, boom. Price moves in threes, 1 retracement, 2 retracement, 3 retracement. So here is going to be a strong key level, and it also lands up with the weekly OB. Coincidence? I think not. This is where people like to talk about it being algorithmic and what have you. So after it does retrace, boom, it comes up to attack it again. It needs enough pins before it turns around and shorts. So I reckon because of the weekly profile, I'm going to say price will be moving sideways, and then we'll see in maybe a week or two that was the sideways movement for consolidation or what have you before price turn around. That's what I'm looking at. That's what I'm thinking. I think price will... So maybe price will have to bounce back, hit an OB down here before turning around to reach these highs here. That's what that's what I'm thinking. You can see today price didn't really... I mean, price did actually interact with our labels. Here's one. Got YC right here, so it's actually quite strong. You see price turn around. But we see price interacting with it regardless. We see why price did hang in the middle of Asia. This is in fact another example as to why it's good to hold on to your draw your labels, because while you're looking at a naked chart, you will be confused. That's normal, because price is always trying to do fake outs. You're always going to be a tad unsure as to whether it's a true move or not. When you listen to my videos, I'll talk about algorithmic entry, boom, 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 boom. But I'm only taking the algorithmic entry if, do you know what I mean? Remember, when you're moving mechanically, or you're answering to if-then statements. So if I don't know the correct if, then that means that my win rate is going to be lower. Do you know what I mean? It's a tweak that I haven't added to the formula yet, that I still need to. So, if you use or liken your labels to stabilizers, or like when ICT's talking about PD arrays, I even mentioned it earlier. All these, yeah, they're all interchangeable, really. Key levels, they're all interchangeable. So, yeah, I've drawn it out. Now I can see price. All right, cool. So it's interacting off something. It's not just crushing for no reason. Cool. It's also moving off hourly FEG. Brilliant. Boom. So this is a strong key level because there's 2 key levels. Therefore, it's another confluence. You know what I mean? Like, that's where your mind should be. That's a trail of thought. Your mind should be moving linearly towards. Boom, rally, boom. Like this price action, if you flopped today, don't worry about it. This is actually, I don't want to say it's easy, but it can be done. So don't you worry about it, it will come. Yeah. I'm gonna leave it there. If you have any questions about the topics discussed or the concepts discussed, contact me. Instagram, Dylan Kane Rose. That's my main platform that I actually operate from. Alternatively, of course, you can just message me in the comments below and I'll get back to you. Yeah. Oh, actually, trading performance update. Yeah. Funded accounts are in profit, ready for withdrawals. All but the newest accounts that I've picked up last week, because I need a tad more. I closed a bit early today, didn't I? So I didn't make as much as I should have. So I'm like £30 off, I think, 2 accounts. So yeah, I guess that was like how quickly my thumb pressed the button. Do you know what I mean? But that's fine. I'm waiting for my next trade. Then I'll be all right. Then we'll be ready for profits. So for new students, you've probably seen a week or two. They've had 2 on board of drawdown and now profits. So, but you guys will now see how we basically, somebody use the term professional losers. While I don't like it, there is an element of truth to it. We're in drawdown, then we're in profit. We're in profit, then we're in drawdown. That is it. The rest after that is psychology. But first is strategy, then it's your risk management, then it's psychology. Do you know what I mean? Because your psychology is going to help you maintain. But yeah, thank you for your time.